Stocks gain with mid-caps leading the charge as hopes of a trade deal with the US rise. Utilities and energy are the big gainers while Realty drags.
JSW Paints will snap up Akzo Nobel's 74% stake in its India business for nearly 9,000 crore rupees, make an open offer to minority shareholders at 3,114 rupees per share. The deal will make it the number 4 player in a highly competitive paint sector.
After Adani and Torrent Power, now Tata Power bids for parallel electricity distribution in Maharashtra. The expansion will see it serve a total 15 million consumers, making it the number 1 power distributor in the country. Experts, however, say it may take 5 to 7 years to get going.
Jio BlackRock has obtained the certificate of registration from market regulator SEBI to commence stock broking business, the move that can stir things up in the fast expanding business.
CNBC-TV18 has learnt of the 3 candidates in the reckoning to lead IndusInd Bank, and these names will soon be sent to RBI, which may fast-track the approval.
Good afternoon. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio, and what a day this has turned out to be. 60 points on the Nifty, 155 points on the Nifty Bank. Starting July series with a bang, the broader market's doing a lot better. We have around 1,800 stocks advancing for 800 stocks which are declining. But in terms of news flow, it has been one piece after the other. The big one, Ekta notwithstanding, has been the one in the paint space, where now we have clarity. Who is the buyer for Akzo Nobel? For a lot of time, for over 5 weeks or so, there was murmur that this deal is coming. Now it has come. JSW Paints goes ahead and buys Akzo Nobel. On the back of that, Akzo Nobel is higher, but all the others are higher as well, because there is this industry relief that has come by. Okay, the deal is done. Now let's focus on growth. Asian Paints, for instance, has moved to the high point of trade. Let's see how that pans out.
Okay, well, maybe enough space for all in the market. But nonetheless, let's in fact focus on that in just a bit. But I just wanted to point out with regards to the market, week to date will give you a good picture in terms of the momentum for the market. So if you look at the Nifty on a week to date basis, that's up around 2-odd%. Compare that to the mid caps, which are up around 2.88%. But just look at how the BSE small cap index has moved on a week to date basis. It's gained almost 4%. It's up around 3.77% on a week-to-date basis. So that gives you the real picture in terms of the kind of risk on that we're seeing for our markets. And the India VIX, which basically gives you an indication in terms of the volatility, has fallen around 8.5% this week at current reckoning. So that's a couple of stats for you, and just summing up how the risk-on momentum has been for the markets. But like Mangalam said, the big story that we're tracking today is CNBC-TV18's news break, which is confirmed Akzo Nobel India has surged with JSW Paints set to acquire the promoter's stake in a deal which is worth nearly 9,000 crores at 2762 rupees per share. Remember, Parth Jindal had told CNBC-TV18 on the way back in January that he would give it everything he has to acquire Akzo. Listen in.
I think there's no choice. If JSW and the ambitions we've shown that we want to be a top 3 player in whichever sector we play in, if I have to do that, then I have to give it everything that I've got for Akzo.
How will you fund it?
It's going to be a mix of the family investing, and private equity.
Okay, so those are some important statements which we got all the way back in January in terms of the interest for Akzo Nobel. But let's now go across to Rachna, who's been on top of the story to give us more details. Rachna, over to you.
Right. JSW Paints has officially sealed the deal to acquire a 74.76% stake in Akzo Nobel India for 9,400 crore rupees. This is a CNBC-TV18 news break confirmed. Now, this comes at a price of 2,762 rupees per share. That's a 16% discount to the market price, as we had indicated yesterday when we reported this. Sources tell CNBC-TV18 that this deal will be funded through a 2,000 crore rupee equity from the Jindal family, backed by stake and asset sales, while the remaining 7,000 crore will come in form form of debt and structured credit, including financing from global institutions. But before the deal can go through, there are a few crucial steps left, starting with a mandatory open offer. Under SEBI rules, any acquirer picking up more than 25% stake in a listed company has to make an open offer to public shareholders. In this case, JSW Paints will offer to buy up to 26% more of AkzoNobel India at a price of 3,417 per share, which is a significant premium to the market price. Now, post-merger, JSW Paints will have a production capacity of up to 470,000 to 520,000 KL per annum, blending JSW Paints, Wasind and Vijayanagar units with AkzoNobel India's plants in Gwalior, Bangalore, Mohali and Hyderabad. The employee headcount is also expected to be around 3,500 people, with an estimated revenue of over 5,000 crore in 2025, well in line with its FY26 growth targets, which was the 5,000 crore. With a 9 to 10% share in decorative paints market and becoming the second largest in industrial coatings, this move makes JSW Paints the new number 4 player in India's paint landscape. A transformative step and a bold bet by Parth Jindal to build what he calls the paint company of the future.
Okay, all right. Thanks very much for that, Rachna. So that's the big story that we're tracking. And as you can see, AkzoNobel is the one stock which has actually surged around 8% on the back of this particular piece of news. It's at around 3,460 odd rupees. Remember that its 52-week high stood at around 4,649 odd rupees. So there is some kind of, way to go when it comes to further possible gains towards the highs that we've seen, or the best levels that we've seen in the past 1 year odd for that particular stock. But separately, like we mentioned, bigger stocks such as Asian Paints currently are quite unperturbed by this. In fact, Asian Paints is currently 1.6% higher. And on a year-to-date basis, however, it's not done much. It's still about higher by around 2%. So you'd have to say it's consolidated with a little bit of a positive bias. But for today, it's reacting to the news with a little bit of positivity. And so is Berger Paints, as you can see on your screen, up around 0.7%. So unperturbed for the current existing players. But let's go across to Mangalam. He's going to break it down for us and going to tell us about how exactly the dynamics in the paint industry change, considering that now this big deal is done.
Well, there have been so many paint players. JSW Paints already had its paint business and now it's gone ahead and acquired AkzoNobel India. So these two companies were actually already in the market, but at the same time, now they will be in the market together. So that's something that we'll be watching out for. Just to run you through the numbers, 75% of the promoter stake being bought for almost 9,000 crore rupees. After that, there will be an open offer as well, which will come in at around 3,417 rupees per share. Let's tell you a little about AkzoNobel. You and I would know it better as the makers of Dulux Paints. It's fourth largest paint company in India, having a higher market share in the premium end as against the mass and popular end. And they have been looking to, diversify their revenue as well. 35% of their revenue comes in from industrial business. And remember, 550 crore worth business is being sold as a slump sale basis to the international parent. They are currently in 5,700 towns in India. The 2-year target that they had laid out earlier was to reach 8,000 towns. What does this do to the dynamics of the paint industry? Asian Paints stands head and shoulders above everyone, with FY25 revenue being close to around 34,000 crore rupees. Berger, a distant second with 11,545 crores, is the second place where a lot of disruptors are eyeing their, share here. Kansai, AkzoNobel and Indigo Paints are the ones that we're looking at here as well. With Birla's, entering this space, which they announced that they've reached high single-digit market share in the fourth quarter, it, appears that their fourth quarter run rate was close to around 900 to 1,200 crores in terms of revenue. The company's long-term target for 3 years since completion of operations is close to 10,000 crores, and they aim to break even. JSW Paints organically, ex of AkzoNobel, did about 2,000 crores in FY24 revenue. Their FY25 target was 3,000 crores and FY26 target 5,000 crores. Remember, nearly 60% of that comes in from their intra-group revenue. So organic revenue for them will be about 40%. Where they grow this will be crucial. And how much is the headroom? The total paint industry right now is close to 80,000 crores, of which organized players are 65,000 crores. The growth estimates for the industry is a little around nominal GDP, between 12 to 13%. And market share of the top two players has been over 50% for the last 4 or 5 decades, and that's how top-heavy the paint industry is. And which is what excites all these conglomerates to come in. What is it that is the key driver or strength in the paint industry? It is not as much as capacity, because the industry is well utilized when it comes to capacity. It is distribution, the brand strength, and tinting machines that you have at the dealer end is something that drives industry growth and drives growth of individual players out here as well. What we need to track is expansion plans of both incumbents and disruptors in the marketplace and in backward integration as well. We've seen Asian Paints announce a lot of backward integration plans. The second thing is, are people selling at a lower margin to gain market share? Because Asian Paints too had mentioned that cost of sales is increasing. And the third thing, from an investor standpoint, will valuation multiples for the paint sector derate from here on or not? All of that depends on what JSW Paints actually does. What JSW Paints actually does will be the impact of, what people will see on the market share as well. Morgan Stanley had recently written, because of increased competitive intensity, the top 5 players will lose about 300 basis points of market share, of which Asian Paints stands to lose further 200 basis points. Now, for JSW Paints, how much more will they have to invest in capacity, in brand building, in strength, and building distribution is something that the street will most definitely keep an eye out on, because 9,000 crores is what they're coughing up, and they are actually looking at raising this funds via debt as well. And the second part that the street will look at is how much are they going to grow with AkzoNobel ex their group business, where 60% of their revenues come in from group business itself. And finally, we'll be watching out for, from a shareholder standpoint, JSW Paints was supposed to go for an IPO. Parth Jindal has said in his earlier interviews as well. But now, will they reverse merge the JSW Paints business into AkzoNobel itself, or will they separately list JSW Paints at some point in time via an IPO route and then club the two is something we'll get an answer to. As far as the industry dynamics are concerned, the last 1 year, these paint stocks have been fairly depressed. They've been off their 52-week highs as well. And if you look at the valuation multiples too, they've come off. At peak, Asian Paints used to trade at over 60 times, now at 45 times. Berger, over 50 times, now at 41 times. We have Indigo, AkzoNobel, and Kansai trading anywhere between 32 to 39 times as well. So how JSW Paints plans to grow with AkzoNobel is something that the street will be eyeing. But more importantly, will it come at the cost of margins and market share for the others or not, is the big question.
Okay, all right, Mangalam. Yes, absolutely. That those points are taken going forward. Let's see how they actually use this particular acquisition. And remember, the Dulux brand, which is owned by AkzoNobel and which is really the big brand for them, is actually a 100-year-old brand that they would be acquiring. So just gives you a sense in terms of the kind of legacy that they'll be bringing on as well. Well, we need to take a short break. We'll get you more on the markets. Once we're back, we'll focus on IndusInd Bank, as sources say the bank may get a new CEO. That story up next. Welcome back. Well, for the markets, it's steady as she goes. So the mid-cap index is up around 0.6%. We have the advanced decline ratio, which is on the positive side as well. Let's discuss the big piece of news, which is basically on the paints industry and the acquisition of AkzoNobel by JSW Paints. We have Prakash Diwan joining in to talk a little more about that. Prakash, hi, welcome to the show. Well, if you could just give us your broader sense in terms of this acquisition, and actually what would it mean to bigger companies such as Asian Paints?
Yeah, hi, Ekta. Thanks for having me on the show. So I think this kind of starts consolidating the contours of the sector's consolidation, which was happening, which had started with a lot of greenfield entries from Birlas, from the Adanis, from the likes of Astral on the fringes. Now, what's going to happen is AkzoNobel had expressed its intent to move out of the country quite some time back, and there was an overhang of sorts. And who would be the suitor was always a big question. But it makes sense for a player like JSW to have come in and get themselves up to scale very quickly. So, which means that the industry only gets more stronger and competitive. Till the time JSW digests this acquisition and consolidates, because they are much smaller than what AkzoNobel is, which means it'll take some time to absorb this kind of a large acquisition. You will have, so while they blink, you probably have the likes of Asian Paints and Berger getting some advantage on market share clawback. not that significant, but it will give them some sort of time to get back into some of the market segments which they had lost ground on. But importantly, what it does to the industry is it raises the bar, it improves quality, competitive intensity, and for JSW, it's a acquisition which is fairly large. But I think they are seeing it in the context of the fact that they have a very large distribution network through the hardware route, steel, cement, all of that. So this becomes very easy for them to do it. Remember, Axo was in 5,000 cities or towns, but on a standalone basis. JSW has enough and more to kind of back that up. So they will scale up very rapidly, is my sense. And I wouldn't be surprised if they end up in the next couple of years being in the top 3. So, yeah, lots of markets reshuffle and good for the consumer. Hopefully, it will kind of make sure that quality keeps improving. Nobody takes it for granted that the consumer will buy what you sell. I mean, all these years, Asian Paints has had this advantage of being very dominant, and that's never very healthy for the consumption side. So that should change dramatically after this.
A two-part question here, Prakash. On the one hand, you have Birlas, which have done roughly 2,000 crores of sales in the first year. It's easier to get revenue in the paint industry than it is to get to profitability. So at some point, they'll be looking at profitability as well.
Right.
And secondly, when it comes to JSW, we understand that a large part of this deal will be funded via debt. The one thing that is good in the paint industry is the listed players right now is that all their balance sheets are devoid of any serious debt here. When you have a player which comes into the business with a fair amount of debt, does that limit the elbow room to compete very fiercely?
So let me address the second point first, Mangalam. That's a very valid point. It's a significant acquisition which seems like getting to be funded by overseas credit funds and all. And that means that they will have to be fairly disruptive if they really want to improve things. As I said, they'll use their distribution muscle to change things. I wouldn't be surprised if paints start getting sold at points of sale which we've never imagined, in ways that we've not imagined, channels that have not hitherto been explored. So all of that will happen. That's one. And the moment they start reaching scale, which is, let's say, between the top 2 players, as you rightly explained, it's 50% market share still resides with the top 2. So there is enough room for the Birla Opuses and the JSWs to kind of compete for being number 3 or 4 or whatever quite rapidly, which means rapid is still 2-3 years away. And they could alter the debt profile with a potential IPO. See, let's not rule out the fact that they have always evinced interest, at some point expressed interest to do an IPO, and it could kind of make sense for them to do some sort of a equity reset the cap table in a way that the debt comes down, right? So they can't live with the debt forever. They will have to pare that down. And on the first question that you had, where exactly, like Birla is, for example, we don't have the exact numbers, but I know that they are looking at 10,000 crores, which makes them very close to Berger. But for breaking even, they will also need to get scale. So once a company reaches about 22,000 crores of revenue, then you start having to do with, some margin improvement, some levers start emerging. But till then, you just have to get market share. So the market share never comes with a break even very quickly. So I would believe they will also want to make profits in the next couple of years, want to start breaking even. And same is going to be the case with JSW with a slightly longer timeline. So we'll of course wait to hear the plans and all of that, but it's too early. But what it does to the sector, as you rightly explained, is consolidation with much larger players now throwing in their hat in the ring. It's no more, fringe players. It's significantly large players at work with this scale.
Okay, that point is taken. But Prakash, we have another big story and we're going to request you to stay on for your thoughts on it. Let's in fact first get Ritu in to give us the news. IndusInd Bank may get a new CEO soon. Sources tell CNBC-TV18 that there are 3 candidates in the reckoning to lead the bank. Ritu is here with the details. Ritu, over to you.
Well, yes, Ekta, for IndusInd Bank, for the last few months, the biggest question really has been who takes over as the next CEO to clean up the books, to restore confidence and steer the bank back to growth. Now, our sources indicate 3 clear contenders have emerged, and these include Rajiv Anand of Axis Bank, Anup Saha of Bajaj Finance, and Rahul Shukla of HDFC Bank. Now, Rajiv Bajaj of Axis Bank has more than 35 years of experience in the financial services space. He's been with the Axis Group since 2009 and on the bank's board since 2013. And in his last position as the DMD, he oversaw wholesale and digital banking. Interestingly, he recently announced his retirement from the bank and will be exiting Axis come early August, which will make him available to join IndusInd Bank if he is selected. And our sources do say he's seen as a very strong contender. Now, Anup Saha from Bajaj Finance also comes with more than 3 decades of experience, 25 years in financial services, 14 years at Axis at ICICI Bank before he joined Bajaj Finance in 2017, where he was very recently elevated to the position of managing director. He's led, credit cards, mortgages, auto loans, structured finance, and so on. So has varied experience there as well. Rahul Shukla of HDFC Bank, again, more than 30 years of experience. He has been with Citibank before and joined HDFC Bank in 2018, where he oversaw the corporate book and then later, of course, commercial and rural banking. And currently, interestingly, he's also on sabbatical from HDFC Bank. Now, while all 3 are seen as strong contenders, our sources indicate Rajiv Anand and Anup Saha are the ones that are being looked at most keenly by the board of IndusInd Bank. Now, we also understand that while IndusInd board has held informal discussions with the Reserve Bank of India about these candidates, it has not yet formally submitted the names, even with that June 30th deadline to submit the names to the regulator looming. Now, typically, if you see, RBI takes anywhere between 4 to 8 weeks, sometimes longer, to approve a bank CEO. But in this case, our sources suggest that the regulator could fast-track the approval process, simply given the extraordinary circumstances at IndusInd Bank, which is currently seeing a leadership vacuum.
All right, we take that point. Thanks a lot for that. Ritu, 3 names coming up for the ones who are leading IndusInd Bank from here on. Prakash, the stock has seen a big gash, and it's largely on account of the news that came by with regards to erroneous calculations of losses, etc. Now, last week we had Nomura upgrade the stock. Brokerages are getting slightly constructive after the big decline. They believe that a lot of the weakness is priced in. Now, with the leadership change, do you think IndusInd Bank can turn a leaf and perhaps look attractive from an investment standpoint?
So, Mangalam, without getting into specific names, since I don't have much insights into who would kind of make it to the top post, but what the bank needs is urgent repair, right? There's no doubt. Nobody will even get into a debate that the bank needs repair and very urgently. You have a bank with a very strong franchise, very good presence, brand, presence and all. But you need to make sure that the balance sheet starts getting repaired. You need leadership, possibly with somebody who has turnaround experience as well. And once that happens, then you will see the path to recovery get unfolded. But whether to buy it at this level, you would have to buy it at the time where you start seeing the repair getting activated. Now, that would mean that whoever comes in, give somebody 6 months, 9 months, see the metrics change. That's the time to buy. Till then, it'll probably be a hope trade, So I don't think there's anything negative that's yet to kind of come. I mean, there are no negative surprises for that matter, which means that all the selling, all the panic is already in the price. But the build-up would need some sort of triggers, some sort of levers which the market very clearly recognizes. So I don't think just the appointment of a CEO will make that difference, because you need a CEO to steer the ship into out of the troubled waters. But how smooth the sailing is going to be will take some time to figure out. So we'll wait for that. But definitely the repair is a great sign. There's a great relief for a lot of people who probably are stunned by that fall from 1200 to 700 or whatever.
Okay, all right. Yes, absolutely, Prakash. Thanks very much for joining in and giving us your perspective. And thanks, Ritu, for joining in with your important story coming in for IndusInd, where the stock now is up around 3% but the road ahead and the kind of recovery that one will have to see after the new CEO comes on board will be something that the street will track. But as of now, we need to take a short break, but do stay tuned. We have a lot more coming up, especially on the paint sector. Stay tuned.
Welcome back, and joining us now is Kishore Runwal. He's MD at Anmol Jewelers. Mr. Runwal, the way we've seen the month of June pan out, it is silver which seems to be outperforming gold in sense of prices. Gold is up 1%, silver is up 9% for the month of June. Has it impacted the physical demand for silver in the Indian markets?
I see gold already consolidating at these rates, and now, but seeing the silver positions as of now in the month of June, we see a very strong holding at MCX at these rates. Silver is not following between $36.45. Nearly, it is running in a range of 36.2 to 36.5. We don't see. We have not seen a fall since last 10 days. So
Right.
gold is consolidated at these rates, but I sense that in coming few days or weeks, we can see one more jump in silver where it can touch nearly $38.
How is it impacting the demand in the Indian markets then?
2020, 25 is always is been very slow in the gem and jewelry market compared to 2024. The sales have gone down in gold, but silver is doing much better. Seeing the import levels this month, last month of May, where 460 tons of silver was imported in India. So seeing those records, silver is doing better than gold, and the demand for silver in the markets are fairly good and not that bad compared to gold. But markets as of now in the jewelry sector is going very slow.
That point is well taken. Mr. Runwal, also when we look at silver, the silver ETF seem to be doing well too. But in the physical markets, yet again, is it jewelry? Is it bars and coins? Is it artifacts, statues? I mean, what is doing better?
As of now, artifact markets is down. The bullion markets are steadily down. Investments, people are just watching to invest on silver because it is at a peak. Only I see silver jewelry market doing good due to the reason that gold markets have gold rates have hit very high, and the common man is going for silver jewelry.
Oh, absolutely. Mr. Runwal, while you do deal in silver in a very large way, would you say a lot of gold guy also are going for now standalone silver showrooms? Is silver increasing its footprints in that way too?
If you see in last few years, we have seen so many corporates, big corporates entering for silver standalone stores. There are so many silver standalone stores coming due to the reason that silver's demand in India is gone up. Silver jewelry demand is gone up. Silver articles is also doing good. Due to this reason, as gold markets is now become a matter of rich people, the middle class and the common man is now going for silver. We see so many silver standalone stores coming up, and in coming 2-3 years, I see a revolution in silver industry.
Mr. Runwal, also you talked to us about on how much of import that we've seen in case of silver in the last month itself. So if you talk about 2025, the calendar year, until now, the first 4 or 5 months, what has been the total import for silver?
If you see in 4 or 5 months, 2,090 tons of imports have been done as per Metal Focus reports. But last year in 2024, in the whole year, we had imported nearly 7,600 tons of silver in last year at all. So last year was the best year for the gem and jewelry industry. This year, we are in the midway. We have roundabout touched 2,100 tons of silver approximately. So we hope that in coming as down the lane seasons are there, festival seasons are there, marriage seasons are there. I think from here we will pick up more and more imports will be coming in India in silver in coming days.
All right, Manisha. Thanks a lot for taking us through that conversation. Kishore, thank you so much for joining in with your perspective as well. Take a short break. On the other side, don't go anywhere because we are covering the big deal that took place this morning. Abhijit Roy, MD and CEO at Berger Paints, joins in to discuss the paint sector at large, specifically post this big deal. Welcome back. Big deal of today. JSW goes ahead and acquires AkzoNobel, a deal that was in the works for many months and the last few weeks. Now we have Abhijit Roy, MD CEO at Berger Paints, the second largest paint company in India, joining in at a time where a lot of the conglomerates are eyeing market share in the paint industry. Abhijit, two questions. First up, thank you so much for joining in. I understand that you came in from a dental appointment. So, at a time when the industry is looking to plug some of the cavities and maybe get into root canals, etc., you're perfect to tell us about how the industry is likely to, react to this news. I asked this specifically because with Birlas, not a lot of people knew how they would compete on the ground. Here, you have JSW Paints, which has been there in the past, and you have AkzoNobel, which has also been there in the past. So you're fairly well versed with their ways of working. So in light of that, how do you view this deal, especially for the incumbents?
So, Mangalam, nothing changes much, because these two players, as you rightly said, have been there in India already. Both JSW and Akzo have been operating in this market. We are more or less aware of their strengths and weaknesses, and we know what they are doing in the marketplace. So it's just a change of hands, possibly a change, in the management style that it is operating in. So from that perspective, there might be some small changes, but overall in the industry, nothing changes much. What does happen is that, there is a consolidation which is happening now. So there are now, 5 players in the industry. The top 2, Asian and Berger, remains. The third, fourth, and fifth position is up for grabs, and that's where the competition will be intensifying a bit. Between Birla, JSW plus Akzo and Kansai.
That you're saying that the top 2 stays intact because Birlas themselves have explicitly said that they are eyeing the second position. So I'll speak about the Birlas and how they have fared so far, because it's been almost 12 months since they've been in the market. But on JSW and Akzo itself, you say nothing changes right now because you are well versed with their management style. Together, do you think they'll be a little more aggressive? And if you could give us a sense on what their position is in the market when it comes to dealers' strength in terms of tinting machine strength, and how consolidated entity like that can impact players like you?
So as I said, nothing much changes. These guys have been there for quite a long time, I think. Probably, they will have to change their tactics a little bit. I expect a little bit more aggression from them. So as you can see from the figures which you have put up there, so out of the 4,091 crores of AkzoNobel, about 3,500 odd crores is being, merged with JSW now, because the rest will remain as powder coatings with Akzo. So that, when you add up to the JSW total, it's around that, 5,000 crore mark. Which is where, which is why I said that, in the third, fourth, and fifth position, there will be a little bit of a skirmish there in terms of Kansai and, Birla and JSW plus Akzo now. So that's where it is. We continue to focus on our, growth opportunities that we see for ourselves. Last year also, in spite of Birla, we did manage to grow our market share, including Birla. If you take that into account, we had a growth in market share. We would prefer to remain focused on our own initiatives. I see a lot of opportunities there, and we are not very worried about this change.
Okay. Mr. Roy, while the 2 players remain the same and there's a structural change in terms of the ownership, there will be synergies, and I'm sure that there will be some focus in terms of trying to gain that market share. So in that context, how do you expect the competition to probably increase, and hence margins to probably be impacted on the ground for companies such as yours? Because you have spoken about intense competition in the past couple of quarters. So do margins get crunched even further? Are you anticipating that?
No, I don't think so, because frankly speaking, these both the people have been there for long years. AkzoNobel has been there for 70, 80 years. And the team and the products and the structure remains more or less similar. JSW has also been there for now 6, 7 years. So nothing much changes on the ground. It's just that, yes, there is likely to be a little bit more aggression possibly on the ground. But we are used to competition. We have seen much better aggression, even coming in from Birla earlier. And we have weathered the storm. As I said, we managed to grow our market share in spite of that. So it's not something which is very worrying for us.
It is not worrying for you when it comes to the number 3, number 4, number 5 players as well. But, being in the number 2 position makes you susceptible from competition coming in not only from below you, but above you as well. Because on the one hand, you are looking to grow your market share, despite competition, etc. coming in. The leader has lost market share, and brokerages believe that they can lose further 200 basis points as well. They are deep-pocketed, they are, there for a longer time, and they are equally aggressive, if not more. There are cases open in the court right now. Birlas have accused, Asian Paints for such tactics as well. So in light of that, how do you view competition for you and margins for the industry? Because not only are disruptors looking to get market share, but the incumbent, the leader, also is eyeing that incremental market share.
Yeah, so Mangalam, we have a dual role to play, here in the movie, the Game of Thrones, which is going on now. We have, a role of an incumbent and an insurgent combined together. So we need to protect, what we have already on the ground, which we have a large number of dealers, customers, painters, which we have to protect. At the same time, since we are the number 2 brand, and we are, well known across the country, across dealers, across consumers, across painters as well. So therefore, there is a massive opportunity for us to grow share. So that's something which we are focused on. We are quite confident that we will be able to deliver on that. We have delivered last year, as you have seen, in spite of all the intense competition which was there, and that was at the highest level. We managed to grow our market share, and not only that, we managed to remain profitable or improve slightly in terms of profitability as well. So therefore, we are not, very, very worried, as to what is happening, because this change that you have seen now of JSW and Akzo is actually not a major change. It's a very minor change in terms of ownership, because both the companies and the people and the brands and the products have been in the market for quite some time.
You in the past have looked at AkzoNobel yourself, right? What made you pass this opportunity? Was it just the price?
Yeah, primarily the valuation, which we found, not worthwhile, because that much of money or even a fraction of that, if we spend judiciously on building up, because we have a strong brand of our own, right? So it took, have another brand come in and, try to build that up, it will be a confusion in the market. It is better that we strengthen our own brand, strengthen our own distribution network, strengthen our own, people strength, and that should give us, much better mileage than acquiring this particular brand.
All right. So, Mr. Roy, what we gather is that it's business as usual for Berger Paints.
That's right, and we need to carry on with our own, business objectives, which we have set out for ourselves, and we carry on. We have, this plan is already there. We have built it in that, this is going to happen, more or less it was well known.
So in that context, if it's business as usual, Mr. Roy, I have a two-part question.
Yeah.
Are you then in a position to raise prices in the market because you're not fearing competition snapping at your feet? And secondly, when you talk about market share, you've been consistently growing. You were at around 22% as of the end of FY25. Are you anticipating further growth in market share?
So for the first question, whenever it is required, yes, we will be increasing prices as and when required. As of now, the prices of raw material are benign, and I don't think there is a need for increase in prices. But, we have certain brands which are market leaders in their own rights. And in all such cases, there is a possibility of increase of prices as and when required by us. Not all brands can be, we can have price increases. There are some commodities where we have to be competitive. Vis-a-vis the leader, we have to maintain some sort of a price parity there. And so therefore, those are items where price increases anyway never happen and will not happen in the future as well. So it's a mixed basket, but there are a certain number of brands where price increases can easily happen as and when required by us. As far as the second question is concerned, the objective is to maintain and grow market share as much as possible. We have our own initiatives which we have For example, in the urban markets, we are doing something interesting, and we expect that our presence in some of the critically urban markets like Bangalore, Mumbai, Pune, etc., will improve going forward. So this is what we are focused on. Our distribution network expansion is on stream. We are expected to add 10,000 tinting machines across the country. Last year, we had installed about 8,000. So that's a massive jump in numbers. And we expect that we will be able to attain our distribution objective as well. So combination of these two factors, some product categories like construction, chemical, waterproofing, where we are doing quite well, we expect our growth momentum will continue. Therefore, we are not very worried about this.
Right. I have a two-part question, Mr. Roy. The first part is demand, because the last 12 months, demand was very subdued. And in that, competition was intense. So that impacted margins for everyone in the industry. So has demand seen an improvement? That's part one of the question. And in light of the current environment, part two of the question is, I'm sure at some point both, the Jindals and Akzo Nobel will come together to address the press, address analysts on what their growth path is. What would you like to hear from them, and what would you, take note of very specifically when they're speaking about their expansion plans? What is it that may worry you, if at all?
So the first question, competition has always been there, Mangalam, and I don't see that changing much. We will continue to focus, as I have said repeatedly, that, our objectives are very clear, and I don't see any change in that, in our objective and, the way we look at the market. As far as the second question is concerned, what is worrying or not worrying, only time will say, right? But as far as we are concerned, we see that these two companies have existed in the market. They will come. They will obviously say that, we can become more aggressive because, the international had some constraints, and therefore we were not very aggressive on the pricing area, and maybe we will have some increased, pricing pressure, brought into the market. But we are used to this, and I don't think changes are going to make much of a difference. Ultimately, distribution, brand, these two are the ones which will play a critical role as far as the decorative business is concerned. And that's where we are focused on, and that's where, we think that we have our own strengths and we can continue to operate in this market easily.
How's Birla's performance been in the marketplace right now? I mean, they've been claiming high single-digit market share at the end of the fourth quarter. Has that sustained? Have they been growing by leaps and bounds?
No. So it's been now static more or less for the last 3-4 months. It is true that, they had been, reaching that about 6.5 to 7% market share. That's where they were, at the exit place, in quarter four. And they have remained at those levels, for the last 2 months as well. From market information that we have, nothing much has changed after that.
And demand is improving right now, is it? Overall for the industry?
It is at the same levels, yes. So they are doing about 300 crores per month on an average. That's where last 5 months have been in that range of 280 to 310. That's where they have been operating. Nothing much has changed beyond that. So no,
I'm talking about the overall industry demand.
After that.
I'm talking about the overall industry demand. Is it a lot better than what we saw earlier?
Overall industry demand, has improved a little bit, not significantly improved. Progressively, it is improving. From April to May, there was marginal improvement, though May last few days it got impacted because of excessive rains. June has been slightly better than April and May. So overall, we are going to have a single-digit growth, as we had, in quarter four, slightly better, possibly, or around that point, in quarter one as well. And going forward, we expect that half year, second half, will be better in terms of growth rate.
Okay. And you added 550 stores in the previous fiscal. What is the capex lined out for this year?
So, our main capex will be the completion of the expansion at Hindupur and starting up of the Panagar plant, so not significantly high, it's around similar levels as was there last year. And it's all from internal generation, no debts, nothing, so it's clean, absolutely.
All right, Mr. Roy, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Berger Paints, a very confident Berger Paints, saying that there is just a shift or a change in hands in terms of ownership at this point in time, but it is business as usual for them. And you can see that sort of reflect on the stock prices today as well. There's no real big fear which is seeped in terms of the stock performance. Asian Paints, as you can see, up around 1.8%, and Berger up around 1%. So it is Axo which has benefited the most with this close to 9,000 crore deal. We'll take a short break, but up next, more stocks. Stay tuned. Welcome back. Well, picking up pace for the mid-cap, so up around 0.7% currently for the mid-cap index. The advanced decline ratio is holding on the positive side, so around 2,380 stocks advancing to around 1,500 stocks declining. Just want to point out that a lot of volume traction actually seen in Bajaj Hindustan. So that stock has gained around 12.5% this week. It's doing well in today's trading session. And a couple of others which have actually done well this entire week is Northern Arc. So that stock is up around 17.5%. We have Bazaar Style Retail, which is up around 17% as well. So a lot of traction in specific stocks. It's a wrap on the show, but stay tuned. Business Lunch up next.